In the heart of Jakarta, Bank Indonesia faced a crucial crossroads, one that would shape the country's financial landscape for months to come. After much anticipation, the central bank made a pivotal choice. It decided to keep its main interest rate steady at 4.75%. This decision wasn't made lightly, and it sent ripples through the financial community, both at home and abroad. This isn't just a technical move, it's a decision that reaches into the pockets of everyday Indonesians. By holding the rate, Bank Indonesia influences the value of the rupiah, the cost of borrowing money, and the overall health of the economy. For families, it can mean changes in loan payments or the price of imported goods. For businesses, it affects investment plans and hiring decisions. The central bank's message is clear. Defending the rupiah is the top priority, even as the economy shows signs of slowing down. By keeping rates unchanged, Bank Indonesia signals its commitment to currency stability, hoping to prevent sharp fluctuations that could hurt confidence and disrupt trade. It's a classic dilemma. Should the bank support economic growth by lowering rates or protect the currency by keeping them steady? Each path has its risks and rewards. Lower rates might boost spending and investment, but could weaken the rupiah. On the other hand, a strong currency can help control inflation, but might slow down growth. We'll break down what this means for Indonesia's future, why the value of the rupiah matters so much, and how this decision touches the lives of millions, from families shopping at local markets to entrepreneurs running small businesses. Every choice made by the central bank has a ripple effect, shaping daily life in ways both big and small. The bank is betting on stability now, hoping that a steady hand will guide the country toward greater prosperity in the future. It's a careful balancing act, requiring patience and foresight from policymakers and citizens alike. The stage is set for Indonesia's next economic chapter, where every decision counts and the world is watching to see what comes next. Let's get to the basics. Bank Indonesia is the nation's financial guardian, managing the money supply, overseeing the stability of the rupiah, and working tirelessly to keep the economy steady. Think of it as the conductor of a vast orchestra, making sure every section, banks, businesses, and households, plays in harmony. Its decisions affect not just banks and big corporations, but also the daily lives of millions of Indonesians. The central bank's main tool? The benchmark interest rate. This is the rate at which commercial banks borrow money from the central bank. It's a powerful lever, setting the tone for borrowing costs across the entire economy. When Bank Indonesia adjusts this rate, it's sending a message to every other bank in the country about how expensive or cheap it should be to borrow money.
This single rate shapes everything: your mortgage, your car loan, your credit card interest, and even the returns on your savings account. Whether you're buying a home, starting a business, or just saving for the future, the central bank's decisions touch your life in ways you might not even realize. When the central bank raises rates, borrowing gets pricier. That means higher monthly payments for loans, which can slow down spending by both consumers and businesses. This helps cool off inflation, making sure prices don't rise too quickly and erode your purchasing power. Lowering rates does the opposite, making loans cheaper, encouraging people and businesses to borrow, spend, and invest. This can help boost economic growth, create jobs, and support families and entrepreneurs across Indonesia.
The central bank uses this tool to steer the economy, aiming to avoid both runaway inflation and painful recessions. It's a delicate job, requiring constant monitoring of global trends, domestic data, and the needs of the Indonesian people.
It's a balancing act. Tap the brakes when things heat up, or hit the gas when growth stalls. The central bank must weigh risks and opportunities, always striving to keep the economy on a steady path.
Every move sends a signal that ripples through the financial system. A single decision can influence everything from the value of the rupiah to the price of groceries, the cost of education, and the health of businesses large and small.
That's why this one number matters so much to everyone, not just economists. It affects families, workers, students, and retirees, shaping opportunities and challenges for all.
It's the lever that shapes the nation's financial future, guiding Indonesia through times of uncertainty and opportunity alike.
And right now, Bank Indonesia is keeping its grip tight, carefully watching, ready to act, and always working to protect the financial well-being of every Indonesian.
For the fourth straight time, Bank Indonesia held its benchmark rate at 4.75%. This isn't indecision. It's a calculated move to maintain stability in a turbulent environment.
The bank's main concern now is the rupiah's weakness, not just slow growth. By keeping rates high, Indonesia hopes to attract foreign investors and support the currency.
Cutting rates could make the rupiah even weaker, risking higher inflation.
The bank is walking a tightrope: stimulate growth or defend the currency.
For now, defending the rupiah wins out.
It's a cautious stance, but one that signals predictability to investors.
The message: stability first, stimulus later.
The wait-and-see approach continues.
The rupiah's value is at the heart of this story. It's more than just a number on a screen. It's a symbol of Indonesia's economic health and a daily reality for millions of people. Every fluctuation in its value ripples through the economy, affecting everything from the price of food to the cost of doing business.
Lately, it's been trading near record lows, about 17,000 rupiah to the US dollar. For many Indonesians, this number isn't just abstract finance. It's a sign of how much their money can buy and how far their salaries will stretch. The weakening currency is a daily headline and a growing concern for families and businesses alike. A weaker rupiah makes imports like oil and wheat more expensive, driving up prices for everyone. Indonesia relies on many imported goods, from fuel to food staples. When the rupiah falls, the cost of these essentials rises, and those increases are quickly felt at the market, the gas station, and in household budgets.
For small businesses, this means higher costs, like a bakery paying more for imported flour and passing those costs to customers. Many local shops and producers depend on imported materials, so when the rupiah weakens, their expenses climb. Some try to absorb the costs, but most have no choice but to raise prices, making life more expensive for everyone.
This is how currency weakness fuels inflation and erodes purchasing power. As prices rise, the same amount of money buys less and less. For ordinary Indonesians, this means making tough choices, cutting back on essentials, or finding ways to stretch every rupiah further.
Global uncertainty pushes investors toward the US dollar, putting more pressure on the rupiah. When there's turbulence in the world economy, investors often seek the safety of the dollar, and emerging market currencies like the rupiah can suffer as a result. This global dynamic is largely out of Indonesia's control, but its effects are deeply felt at home.
Any hint of instability, economic or political, can make things worse. Even rumors or uncertainty about government policy, elections, or global events can trigger sharp moves in the currency. The rupiah's fate is tied not just to economics, but to confidence and perception.
Bank Indonesia's high rates are a defense, making rupiah assets more attractive to investors. By raising interest rates, the central bank hopes to support the currency and keep inflation in check. It's a delicate balancing act. Too high and growth could slow, too low and the rupiah could fall further.
It's a tough battle, but the bank is determined to hold the line. Policymakers are under pressure to act decisively, knowing that every move is closely watched by markets and the public. Their decisions will shape the economic landscape for months, even years to come.
The stakes are high for every Indonesian family and business. The value of the rupiah isn't just a concern for economists or bankers. It's a daily reality for people trying to make ends meet, save for the future, or keep their businesses afloat.
The currency's fate shapes the cost of living for all. Whether you're buying groceries, paying school fees, or running a small shop, the strength of the rupiah touches every part of daily life.
That's why this decision matters so much. The future of the rupiah will help determine the future of Indonesia's economy and the well-being of its people. With growth slowing, many ask, why not cut rates to boost the economy?
Lower rates would make borrowing cheaper, spurring spending and investment.
But the fragile rupiah makes this risky.
Cutting rates now could trigger a sell-off, sending the currency even lower.
That would mean higher import prices, more inflation, and trouble for companies with dollar debts.
The central bank is prioritizing stability over growth, seeing a currency crisis as the bigger threat.
It's a defensive move, protecting what Indonesia has, not risking more.
Until the rupiah stabilizes, don't expect rate cuts.
The bank is holding the line, building a wall around the currency.
It's caution over quick fixes.
Bank Indonesia's decision surprised no one. Analysts widely predicted a rate hold.
Surveys showed unanimous expectations for no change, reflecting the bank's clear priorities.
Experts agree that the weak rupiah leaves little room for maneuver.
Cutting rates now would risk a currency slide, so holding is seen as the responsible choice.
The bank's credibility depends on resisting political pressure and sticking to its mandate.
This builds trust with investors, even if it means slower growth.
The real question is how long this can last before growth suffers.
For now, the consensus is clear: stability comes first.
This decision hits home for every Indonesian.
Loan rates for homes, cars, and businesses will stay high. No relief for borrowers yet.
For small businesses, expensive loans mean slower expansion and hiring.
Many plans are on hold until borrowing gets cheaper.
On the bright side, savers benefit from higher returns on their deposits.
It's a small reward for prudence in tough times.
Most importantly, a stable rupiah helps keep everyday prices in check.
Fuel, food, and tech stay affordable if the currency holds.
The bank's move is about protecting everyone from a cost of living crisis.
It's not easy, but it's meant to shield families from bigger shocks.
While the rate hold is firm, the bank's language is softer, hinting at future support.
In statements, leaders signaled they want to cut rates when conditions allow.
To global investors, the message is, we're serious about defending the rupiah.
To Indonesians, it's, we know you need relief, and we'll act when we can.
This dual messaging manages expectations at home and abroad.
It reassures businesses that help is coming, just not yet.
The bank is balancing psychology as much as policy.
The dovish tone keeps hope alive for future rate cuts.
It's a pause, not a new cycle of hikes.
Flexibility is key in uncertain times.
Bank Indonesia's decision marks a turning point. Stability over growth for now. Borrowing costs will stay high, likely slowing spending and investment. The bank's next move depends on global trends, especially the US dollar's strength. If the rupiah stabilizes, rate cuts could follow, giving the economy a boost. Until then, other tools, like government spending and currency interventions, may help. The strategy is to wait for better global conditions before easing up. Indonesia's resilience will be tested, but the hope is for a stronger foundation ahead. The central bank's defensive stance aims to shield the economy from bigger risks. The journey is uncertain, but the course is set, for now.